The Federal Reserve is about to make a decision next week that could either send the stock market soaring or crash it in a single day. And if you've been watching your savings account, your retirement fund, or just trying to figure out when things might finally get better, what happens on December 10th could change everything. There's an 89% chance the Fed is cutting interest rates next week, and Wall Street is holding its breath. But here's what most people aren't paying attention to. The real story isn't just about next week. It's about what the Fed is setting up for 2026, and it could be massive. I'm going to break down exactly what's happening, what the market expects, and most importantly, what this means for your money. Look, I've been covering personal finance and Federal Reserve decisions for families like yours for years now. I've watched people navigate rate hikes, inflation spikes, and market crashes. And one thing I've learned is that the Fed's decisions don't have to be complicated or confusing. They just need to be translated into plain English and connected to your real life, which is exactly what we do on this channel. Here's what we're covering today. First, I'm going to explain what's happening at the Fed meeting next Wednesday and why the market is so focused on it. Then we'll talk about the bigger picture, the money printing, the new Fed chair coming in 2026, and how all of this could trigger a major market rally. We'll break down who benefits, who might still struggle, and I'll give you practical steps you can take right now to position yourself. Because here's my promise, by the end of this video, you're going to understand this better than most financial experts. And understanding it is how you make it work in your favor instead of getting left behind. So here's the situation. Next Wednesday, December 10th, the Federal Reserve has their meeting, and according to the CME FedWatch tool, there's an 89% chance they're cutting interest rates by 0.25%. That would bring the Fed funds rate down from 4.5% to 4.25%. Now here's why this matters. Back in September, the Fed gave their projections and said they planned to have rates at 3.75% by the end of the year. They're basically following their own roadmap. So a quarter-point cut next week? That's everything going according to plan. But here's what you need to understand. The Fed is currently in what's called an information blackout period. They can't talk to the press or media until after they make their decision. And that's actually important, because over the past month, every time a Fed member opened their mouth, the market odds swung wildly. One comment could change the probability from 70% to 95% overnight. Now here's the critical part. The Federal Reserve hates surprises. They generally go with what the market expects because they don't want to spook everyone. Are they supposed to act like that? No, but that's how they operate. So with an 89% chance priced in, if they don't cut rates, the market would absolutely crash. Stocks, crypto, precious metals, everything would nosedive that day. I know it's just a 0.25% cut, but that's how sensitive the market is right now. Okay, but here's where it gets really interesting. At next week's meeting, the Fed is going to update their projections for 2026. This is huge because it tells us their game plan for the entire year ahead. Right now, their next meeting after this one is January 28th, and the market only gives them a 27.6% chance of cutting rates in January. So if next week the market moves significantly, it won't be because they cut rates. That's expected. It'll be because they changed expectations for future cuts. But there's something even bigger happening that most people are missing. The Federal Reserve ended quantitative tightening on December 1st. QT is basically the opposite of money printing. They've been pulling money out of the system, but now they've stopped. And here's the question everyone's asking. When will they turn the money printers back on? Because when they start quantitative easing again, QE, that's rocket fuel for stocks, crypto, and precious metals. It provides a massive tailwind for almost every investment. Listen, there are liquidity problems right now. The Fed just had to pump $13.5 billion into the U.S. banking system because of liquidity stress. That's the second largest injection since the pandemic. That's why they stopped QT on December 1st. And when the situation gets worse, you know what they always do? They turn the printers back on. That's their solution. It's now widely expected that QE will start in 2026. The only question is when. And this is where things get really interesting. Jay Powell, the current Fed chair, has his term expiring in May of 2026. President Trump gets to nominate the next Fed chair, and no surprise here, he's going to pick someone aligned with his policies. Right now, according to Polymarket, there's a 74% chance Trump nominates Kevin Hassett. Hassett is currently an advisor to Trump and director of the White House Economic Council. He's already told the White House he wants the job and thinks he's the best candidate. Here's why this matters to you. Hassett wants to cut interest rates aggressively, which aligns with what Trump wants. The other leading candidates? They're all more dovish than Powell, meaning they'd be easier on monetary policy too. But here's something fascinating. Trump said they might announce the nominee in early 2026, but Treasury Secretary Scott Bessent said it could be before Christmas. Either way, once they announce the nominee, that person becomes what's called the shadow Fed chair. What does that mean? Even though Powell stays in power until May, the market will start paying more attention to what the new nominee says. Because that person is taking over soon, their words will carry more weight than Powell's projections. It's like when you have a lame duck president. Everyone's already looking at who's coming next. So who actually wins if all this plays out as expected? Home buyers, first and foremost. Lower rates mean lower mortgage payments. We could see rates drop significantly through 2026 as the new Fed chair takes over and potentially cuts more aggressively. Anyone with investments, stocks, crypto, 401ks, IRAs, could see substantial gains if the money printing starts and rates keep falling. Even if you're not actively trading, your retirement account is likely invested in the market. Small business owners benefit because loans get cheaper, making it easier to expand or hire. But let's be honest about who still struggles. People on fixed incomes will earn less on their savings accounts. If you're living paycheck to paycheck, market rallies don't immediately help. And here's the tough part. More money printing means inflation could come back. Lower rates and more money in the system, that's historically been bad for prices. So yes, it's good for investments, but it's not good for keeping groceries affordable. Let me give you the timeline of what to watch for. December 10th next week. Expect a quarter-point rate cut. The market will react based on their 2026 projections and what Powell says in the press conference. January 28th, probably no rate cut, but we'll be watching the new Fed chair situation closely. By May 2026, new Fed chair takes over, likely someone much more dovish than Powell. Sometime in 2026, quantitative easing probably starts back up, meaning money printing returns. The setup for a major market rally is there. Lower rates plus money printing plus a Fed chair who wants to stimulate the economy. That's a powerful combination. But nothing is guaranteed. Geopolitical issues, unexpected inflation, or policy mistakes could derail everything. Let's focus on the positive for a minute. The Fed ending quantitative tightening is a big deal. They're no longer pulling money out of the system, which removes a major headwind for markets. The fact that they're following their own projections means they have a plan, and they're sticking to it. That creates predictability, which markets love. We've avoided a recession so far, which most economists said was impossible after such aggressive rate hikes. The economy has been more resilient than anyone expected. And here's something people aren't talking about enough. Having a Fed chair who's more willing to cut rates and support the economy could mean better job numbers and more economic growth in 2026. Credit card rates, auto loans, and other consumer debt could start coming down too, giving families more breathing room. So what should you actually do with this information? Let me give you practical steps. First, watch what happens on December 10th. Don't panic if the market moves. Understand why it's moving. Is it because of the rate cut or because they changed expectations for 2026? Second, if you're thinking about buying a home or refinancing, start preparing now. Get your credit score up, save for a down payment, and be ready to act when rates hit favorable levels in 2026. Third, if you have high-interest debt, make a plan to pay it down. As rates fall, refinancing options will improve, but you want to be in position to take advantage. Fourth, don't panic about your investments. If the Fed starts printing money and cutting rates aggressively, that's historically been great for stocks and other assets. Stay invested if you have a long time horizon. Fifth, build that emergency fund I mentioned earlier. High-yield savings accounts are paying decent rates right now, and having 3 to 6 months saved gives you options no matter what happens. And sixth, stay informed. Pay attention to what the new Fed chair nominee says once they're announced. Those statements will move markets and give you clues about where we're headed. Look, next week is going to be important, but it's really just the beginning. The bigger story is what's being set up for 2026, lower rates, money printing returning, and a new Fed chair who's aligned with aggressive stimulus policies. Could we see a major market rally? Absolutely. The pieces are falling into place. But you need to be prepared, educated, and strategic about how you position yourself. If this video helped you understand what's happening, smash that subscribe button. I post videos like this every week breaking down Fed decisions, market moves, and personal finance strategies for regular families trying to build wealth. December 10th is just days away. You're now more prepared than 90% of people out there. Let's see what happens. I'll see you in the next one.